Folks, I'll ask you to take your seats, please. I'll just ask you to take your seats. We'll get started in just a moment. Good evening, everyone. My name is Randy Lyons. I'm head of strategy for Scotiabank, and I am delighted at a number of levels to be here and delighted to have so many interested people to come and hear Ray Sharma speak in a few minutes about technology and the digital disruption at what is the inaugural event for the Scotiabank Digital Banking Lab at Ivey. It's a very exciting time in the industry. I know we have a great cross-section of Scotiabankers, Ivey alumni, other interested guests and colleagues. So we're very much looking forward to Ray's remarks. I won't be introducing Ray. That'll be the pleasure of Michael King, Professor Michael King, who I'll speak about in a moment. What I'd like to maybe just touch on for a moment is the thinking behind the partnership that Scotiabank entered into with Ivey just a couple of months ago. So you may have seen some photographs in the lobby. Brian Porter, our CEO, was down at Ivey and was suitably impressed by the new facility, by the way, along with Kyle McNamara and myself. And at that time, we announced what we think was a pretty innovative partnership with an academic institution. And the traditional model, which everyone is familiar with, and I hadn't realized that Scotiabank has been the largest provider of academic scholarships to Ivey students, and that's a point that we're very proud of. But quite honestly, we don't think we were, through no fault of anyone's, by the way, we don't think we were really getting value, or at least the appropriate value. And as we thought about the work that we had in front of us, being led, by the way, and I'm delighted to acknowledge Kyle McNamara, the co-head of IT at Scotiabank, Michael Zerbs, who is somewhere in the room, Michael's in the corner, Kyle's partner, who have been playing incredibly instrumental roles in helping Scotiabank re-articulate our vision, develop the capabilities that we need to achieve that vision, and perhaps most importantly, achieve it at a pace that's dramatically faster than we were going and sometimes faster than we thought was possible. So I want to take a moment and acknowledge Michael and Kyle for their exceptional work in the last year. But against that vision, we knew that we needed to reach into a deeper pool of resources, capabilities, and assets. And I'm an Ivey guy myself, HB 83 and MBA 87. So it was a natural for me to look to one of Canada's leading business schools and to realize that there was a better way. So we started discussions with Ivey probably late last fall, and we're able to culminate a very innovative partnership. And that partnership involves some funding, but I think more importantly, it involves a handful of elements. And the first is, as everyone in this room knows, in the environment that we're operating in, talent is critical. It's always critical, but it seems to be at a particular premium these days, at least in the digital world. So we saw an opportunity to build a deeper relationship, a more meaningful relationship with Ivey, both in terms of accessing their students, but also the tremendous research that's being done by the faculty. So we saw talent as a key driver. We saw engagement as another opportunity. So whether it's a speaker series like this, whether it's hackathons, whether it's case studies, whether it's us going to the school and speaking to students, or whether it's faculty coming to Scotiabank and engaging our senior leaders on thinking differently about what we have to do in a digital age, there were a tremendous number of engagement opportunities. And then finally, we just saw, talent is a tough game, and brand helps. And I think when some of our best talent think about digital, they're not necessarily thinking about the conventional banking environment. So opportunities like tonight give us a chance to tell the story and indicate that Scotiabank is very, very serious. It's not an insignificant point that our CEO traveled down to London to deliver that that message around the partnership and the commitment that we have to building our digital capabilities. So we're very, very excited about this partnership. Tonight is a tremendous way to kick it off. We've got lots of exciting plans. Michael and I are on the advisory board for the partnership, along with Michael King and JP Varen from the faculty as co-directors of the lab. So lots of exciting work ahead of us. So thank you again for being here tonight. I'm now going to introduce Michael King, Professor Michael King, who is one of the co-directors of the lab. Michael has a great mix of both private sector and public sector background. The Bank of Canada, the Bank of Settlement, Bank for Settlements in Switzerland, and then has been leading research for capital markets regulation in the banking sector at Ivey for a number of years. So without further ado, I'm going to welcome Michael to the stage, and he'll introduce you to Ray, and we'll look forward to hearing your remarks, Ray. Thank you.
So thank you, Randy. Thank you, Scotiabank. This is actually a brand new facility that has only opened up recently, and I think we're one of the first non-Scotiabank events to actually sell out. So we appreciate you all coming here. So I'm an Ivey professor. I arrived in 2011, just after the financial crisis, and it hasn't taken me long to get into the sort of the Ivey way of doing things. Let me see. I'm going to start calling on you right now. How many people are Ivey alumni? Okay. So a large number. How many people are Scotiabankers? And how many people are working in the fintech sector? Okay. So as you can see already, we have a very diverse audience for Ray's talk. I'd like to tell you about Ray and his background, which is quite unique. But before I do, I want to let you know what is the Digital Banking Lab at Ivey. Okay. The idea is that this is a fast-growing and dynamic space where there's going to be a lot of jobs, a lot of opportunities for students, for graduates from Ivey and other schools. We've seen a lot of op-eds, a lot of articles about fintech. I actually went back and looked to see what the first reference to fintech was. I found it in 1985. It turns out that fintech is what was old is now new. What's happening since the number of references to fintech, by the way, has just taken off since 2009. It's spiked, and I think what's going on is really disruption. We're really talking about innovation and startups, as opposed to firms that you maybe would not think as financial technology companies like NEC or FistServe or other firms that have been around for a long time. So what we're going to be talking about, what we're going to be doing at Ivey, our mandate is basically to do outreach, research, and education, because the gap we've identified is that there's a lot of discussion, but we're trying to bring an objective, sort of strategic perspective to this, and that's going to be both through academic research, practitioner-related events, and also engaging with Scotiabank and getting our students into those jobs. I would say we have also reached out to a number of different partners here in Toronto. We've reached out to Mars. We've reached out to other incubators. We plan to be very collaborative. We will not be funding startups, but we are going to be providing research and advice on where the opportunities are, and potentially that will be valuable to you. That will all be made available on the website, which will be up in a month. Okay? So it's not a question of helping one bank to outcompete another, helping our university to get a jump on another university. It's about developing this sector for Canadians, because what we see at Ivey, we see this as a fantastic opportunity. We know already that other countries are moving ahead. Singapore, the UK, Hong Kong, Australia are moving far ahead on this, and we want to be there at the forefront for Canada because we have so much strength in financial services. This should be something that we're moving into. Okay? So now today's inaugural speaker is someone who sort of incorporates this kind of dynamism and entrepreneurship. Okay? I found that with Ray, I have a curious number of coincidences in our paths here. So Ray is the inaugural speaker in what will be an annual Scotiabank Speaker Series in Digital Transformation in Banking. Okay, one of the events that the Digital Banking Lab will be organizing. Okay? Ray actually is the founder of Extreme Venture Partners, which is a venture capital firm investing in technology and funding startups. He actually is an Ivey alum, graduated in '96, and then he began his career as an equity analyst, covering wireless technology companies back in the '90s. Okay, and he worked with a number of different firms, Credit Suisse, BMO, GMP, And over those 12 years when he was covering this sector, he had quite a unique view on this sector and was chosen in surveys of fund managers the #1 analyst in the sector in 5 out of 8 years. Okay? So he actually had, as far back as 2001, a very interesting job title. His title was Mobile Internet Devices and Applications. Now, if you think about it, the BlackBerry RIM introduced the BlackBerry in 1998. That's about the year that Ray was getting into this. And we no longer, how many people here have a BlackBerry? Let's see. The Scotiabankers probably, right? Your idea of, well, we'll talk about that later, about the proprietary software. So Ray left the world of banking to move to the venture capital side in 2008. And he's been involved in not only venture capital, but has also been starting up companies himself. He actually was in digital gaming, has a company in their portfolio, Hackworks, that organizes hackathons. He's organized hackathons for the Canadian government, for the City of Toronto, for Scotiabank, amongst others. Okay? He and his partners have invested and sold startups already to Google, Electronic Arts, Salesforce.com, Apple, and a new company that I had not heard of called the Rubicon Project, which is the second largest ad network after Google. Okay? So tonight, Ray is going to share his experience of investing in extreme innovation. He's been meeting people in North America, in Europe, and Asia to find out where the frontier is, and he's going to share his insights on that today, on crowdfunding, blockchain, robo-advisors, and he's going to end with a special focus on artificial intelligence. So I know that you're going to leave here tonight having lots of ideas. Please welcome Ray Sharma.
I had the good fortune of being in the first graduating class of Ivey in '96. It's the year that we took on the Ivey name. And thank you for your attention here tonight. We're going to cover a broad range of subjects here tonight, and we're going to start with a discussion on innovation. When Steve Jobs passed away on October 5th, 2011, a day later, I wrote an obituary that was published in all the local newspapers throughout Canada. It was published nationally. And in this discussion, what I really wanted to touch upon is what was it with our universal love affair with this man? Why is it that whenever something gets written about Apple, it trends up right to the top of the most read lists? And it's something that I really wanted to try and understand from a human perspective. And if we think about it from a human perspective, there's something that we share that's common amongst all of us. We have a fundamental respect for evolution. If you see a smart animal do something, a dog do something neat, you respect that. If you see a person go do their PhD, you respect that. If you see any person bettering themselves, it's impossible not to respect that. And there's no company in the world, no man in the world that was more metaphoric for innovation and evolution than this gentleman. In other words, innovation is evolution. And tonight, we're going to do a discussion that starts very early in mankind's innovation history. And we're going to go right to artificial intelligence, which is arguably the end of innovation, the ultimate innovation. You know, the invention of controlled fire was one of the most biggest revolutions that you could imagine. Before the invention of controlled fire, you were at night scared of animals. You didn't cook food. And fundamentally, the fire was the world's first social network. Actually, got a video that, who better than the History Channel to give us some perspective?
The greatest gift that Mother Nature gave to mankind is rapid oxidation or fire. Fire is a crucial human advantage.
Any kind of society began with the cooking of meat over flame.
Our ancestors from hundreds of thousands of years ago would regularly encounter natural sources of fire, and they probably experimented with them. We're a restless, curious, adventurous species, and there were probably several tens of thousands of years worth of burnt fingertips before humans figured out how to make fire do something useful. But when they did, it extended the daytime so they could see each other at night. It kept away predators.
Fire does the following. It destroys harmful bacteria. It neutralizes toxins. It makes food taste better. And more importantly, it breaks down carbohydrates. So it increases the amount of carbohydrates going into the body. And these carbohydrates will have a major effect on the brain. It is the brain size that begins to increase from 1 million years ago, when we have the first evidence of fire in humans, to 100,000 years ago when modern humans came on the scene.
When we started to cook around fires, that meant groups had to gather together. They would pool their resources. And having to work together to gather that food and cook it was really the beginning of human society.
Home and hearth are places of comfort, where we can seek food, mutual support from other people like ourselves.
You know, the heat, the flame, the beginning of all conversation. Still, you know, flame attracts people to talk to one another.
When you sit around a campfire as a group, you're creating basically the first school ever. Because storytelling is one of the best ways for groups to communicate. Storytelling was not just a comfort. Storytelling was the key to their survival.
If we're looking at revolutions in human origins, control of fire must rank among the most important of them.
So fire deserves special recognition in the history of human innovations. Fire is rapid oxidation. So what is slow oxidation? Just for your reference, rust. Rust is slow oxidation. But if you hear some of the things they said in the video, breaks down carbohydrates, major effect on the brain. You know, storytelling is one of the best ways for a group to communicate. Storytelling is key to survival. So after telling stories around the campfire for 300,000 years, mankind develops in 100,000 BC the invention of language and of, you know, I guess symbology through our hands and whatnot. And after we sat around and talked about things over, you know, campfires for 85,000 years, mankind invented farming. Now, if you think about what farming and the domestication of animals represent, it represents the taming of food. It is a absolutely monstrous innovation. If you flip forward, now we start really getting into some significant human innovations. We get to, say, 3400 BCE and the creation of the wheel. Now you have farming, you have the creation of the wheel, you have a significant expansion in trade. So 400 years, someone comes up with the invention of money. And then we enter a period mankind just goes on to a huge rush of innovation after innovation, except for this one period in human history between 500 and 1500. The Dark Ages are really dark. Actually, if you look through the major innovations throughout mankind's history, there's this 1,000-year gap where I think the only major innovation that I came across during that period was, I think it was the invention of the microscope. 1,000-year period where it was really literally dark. And then electricity comes along, thankfully, to light the way. In 1712, the steam engine is invented. This is the one invention that, when we get to talk about the internet in a second, is the one that you hear a lot of debate as being potentially one of the most significant human innovations in history since fire. And it's because, like, there was this subtlety. Basically the addition of a combustion chamber, a chamber on the side of a steam engine. There was steam engines already in place at the time, massively increased the efficiency. And what this represented was the first time of replacing human muscle with mechanical muscle, and it began things like steamships and railroads. And most significantly was the mass transport of water. We have in 1809 the invention of the telegraph. We have in 1860 the invention of the telephone. In 1897, the invention of the radio. Now, that the radio is important. We don't put the television here, but we put the radio. Brought the first era of mass broadcasting, mass information. The transistor was invented in 1947. It's not the integrated circuit, but the two of them combined resulted in the first personal computer being invented in 1957. Take note, it's IBM that invented the personal computer. It's not Apple, it's IBM in 1957. They don't get enough credit. In 1969, the ARPANET is created. We're going to come back to the ARPANET because the ARPANET this is the birth of the internet itself. In 1984, the first commercial cell phone arrives. That's a big deal. In 1990, the World Wide Web is introduced to the world. Now, I just want to take just 1 second because there's a little bit of confusion about when was the internet created. Now, if you ask the nerds in the room, and that's me, maybe there's some other fellow nerds, we would say October 29th, 1969 is the official birthday of the internet. Now, back then in 69, there was about 5 or 6, 7 different networks. There's this one network called Telnet. Does anybody in the room remember Telnet? Do we have any Telnet people? So remember Telnet. Telnet was one of the 6, 7 networks that were in existence. And ARPANET was the first packet switch network. And what happened was Stanford and UCLA set up the first test. And the guy over on the actually I got the name, his name's Charlie Klein, and he sits down his terminal at UCLA and he lights up the internet and he starts typing in the word login to log into the internet. He types in the letter L, he types in the letter O, and then when he types in the letter G, literally, the internet crashed. The letter G literally crashed the internet. What I want to clarify is that, there's a lot of people that credit 1973 Vince Cerf invented internet protocol. It's a big deal, IP. It's the transportation layer for the network. And in 1990, just before 1999, Tim Berners-Lee invented this thing called HTTP, Hypertext Markup Language, which is, the World Wide Web as we know it. But if you really ask what is the real invention of the internet, if you ever want to go celebrate it when it happens, October 29th, 1969. And at that time, there was 20,000 computers worldwide. Now, if I fast forward you to 2015, what you'll find is this. If you add up all the telecommunications traffic in North America, every single phone call, every single email, what you'll find is that 6% of the North American telecommunications traffic is HTTP. 6% is the internet web surfing that we all do collectively. 35% is Netflix. It's insane. 17% is YouTube. And if you look at it, that's on an aggregate basis. But if you look at it on an upload basis, there's this site called BitTorrent, which I know everybody in here doesn't use. But this one protocol represents 29% of the global upload traffic. Now, just for context, YouTube is the #1 bandwidth-consuming app in mobile, just for context. So if the internet was the earthquake that shook the world, what I want to talk to you a little bit about before we get into our core topic is the aftershocks. 2001 was very important because everyone talks about the bubble bursting and all the trillions of dollars in market cap lost from the NASDAQ. But you know what? There was a subtle implication of that bubble bursting, which was a massive overbuild in telecommunications infrastructure. If you were a banker back then, there was this multiple called PP&E. What this meant was property, plant, and equipment. So people had a very difficult time evaluating how much is WorldCom worth, what's MCI worth. So we decided, okay, collectively, why don't we give them a multiple based on how much they've spent on their equipment? If they spent 10 billion, they've got to be worth 50 billion. So what does that do? It creates an incentive to spend shit tons on equipment, right? So what does this mean is that the bubble burst, but you know what? There's this massive buildup in global, especially fiber and electronics. And the world, because of that one bubble, has virtually infinite backbone capacity now. And that's really important because later on, when we migrate into 2008, so my title in San Francisco, 2001, was Vice President, Mobile Internet Devices and Applications. I was the most specialized analyst in the world. And I didn't pick 2001, I picked 2008 as when the mobile era started, was because that's when Apple dropped the App Store in May of 2008. It's the App Store, which is the real revolution. In fact, anyone who would cover that sector, every single year we would say, okay, this is the year of wireless data. This is the year when data takes off. Because back then, 99% was just text messaging. Nobody was surfing their, so it was in that May 2008, which was really, boom, it changed everything. And when you look at Wi-Fi and the mobile application layer maturing in 2008, we have years and years of application growth. But the vast majority of time is spent in two areas, either in games or in social media. Like 60 to 70% of the user time is being spent there. So what happens when you spend so much time hanging out with everybody else, knowing what they're doing at any given moment? Well, you figure out, okay, they're not using their car, or they're going away on vacation for 2 weeks. So is it a surprise that we enter into the shared economy in 2014 after we've spent years and years of being hyper-connected socially? This is actually very logical. It makes a ton of sense. It's like the whole thing about being around the campfire and coming up with language. So 2012 I picked for the social media era, I just want to say, because at that point in time, Facebook represented 1 out of every 4 page views in the United States. 1 out of every 4 page views. So what does that mean? What that means is this, is that people were experiencing the internet inside Facebook. So Facebook was becoming this black hole for the internet, sucking in all the content and the user time. And that's when Facebook became like a thing to really watch. But when you look at the millennials, with the way their habits are with social media, they're picking up their devices on average 400 to 500 times per day. And that's what helps create that awareness of what everyone else is doing. Now, the real power of the sharing economy is going to be really shown when we talk about the whole fintech wave. Because there's something like underneath the whole sharing economy phenomenon that's very powerful, and that's asset utilization. Because when you look back to the early generation of the internet, 96, 97, there was a lot of supply chain inefficiencies that were eliminated through the first generation of companies on the internet. But then circa 2014, we start getting into this shared economy. Of course, it makes sense to go to your most highest valued assets, your home, your car, but it doesn't stop there. It's going to go all the way down to your power washer. Why would you not share that? Of course, it's going to head in that direction. And if asset utilization, if you agree that asset utilization is at fundamentally the core of this entire trend, then what organizations, what businesses have the most assets in the world? It's the fintech group. It's the fintech phenomenon. It's what brings us here today. And the reason why it is overhyped, 100%, I'll talk to you throughout tonight about the hype factor, and it is overhyped. But the reason it deserves our attention is because trillions are at stake. Trillions are what's sitting on the balance sheet of these organizations, and the whole ability to start up companies is like it's never been done before. So just to quickly, before we start digging deep into fintech, just to kind of round up the discussion, the next major wave that seems pretty obvious to most is this Internet of Everything phenomena. And I just want to mention one thing, which is that the internet, the total number of devices connected to the internet peaked around 10 billion, and it slowed down about 500 million a year to about 12 billion. The internet actually slowed. It's going through an S-curve. And then once we started putting sensors onto Fitbits, right, and we started putting Fitbits on cows and everything like that, we're seeing a surge in internet of connections to 50 billion is expected within 5 years. And I just want to note that this is of relevance because this helps drive the artificial intelligence phenomena, whether it happens in 2030, 2040, we do not know. It's such a big deal. But the connection points to the network are going through the roof from 12 billion to 50 billion. You've all heard of the phenomena of how the value of the network increases as the connection points increase. We're going through a massive surge in connection points. Okay. This is RBC, and this is RBC on FinTech. I'll just do that again. This is RBC. This is RBC on FinTech. So that's literally what we're facing here in our discussion. We're talking about a situation where, CEOs like Anthony Jenkins, he said, I'm predicting that over the next 10 years, we're going to see a number of very significant disruptions in financial services. Let's call them Uber moments in the so-called fintech sector. Uber moments. Now, that's appropriate because what is clear through the business models we're seeing is we're not necessarily seeing revolutionary technologies. We're seeing innovative new business models. He goes on to say, I predict that the number of branches and people employed in the sector will decline maybe as much as 50%. Now, you'll notice it says 2012 to 2015. He just got fired from the board. They got into a disagreement about how much the cost cut, ironically. So let's just look at this. Well, This is a September 2015 statistic, but note Citicorp on the left-hand side. How many jobs? Over 130,000 jobs, 36% of the workforce. Look at RBS, 53% of the workforce. This is the amount of this is the shrinking in employment since the crisis of 2008. Locally, we have announcements from Scotia, TD Bank, CIBC. And this is the sort of projection on what is sort of required worldwide in terms of branches. It's not too far off from what the gentleman was predicting. But you know, it shows that especially in the United States and European area, the number of branches per 100,000 people are in significant decline. Now this is very difficult to read, so I'll just point it out. Don't worry. This was from a recent research report, initiation of coverage of Lending Club. Now, if you guys follow this industry, you may know that Lending Club stock has just declined 50% in the last week or two. And so this is very appropriate to use this as a snapshot because this is just pre that. Actually, I just want to point out a couple other things. Look at the market value of Visa, $232 billion. I bet you guys had no idea Visa was worth that much. Or PayPal has a market value of $47 billion and Square's there. But when I look at the multiples, the fintech averages, what we see down here, and I'll just point it out to you, there's not a significant multiple premium that fintech companies are getting over other companies based on this snapshot here. So there's no bubble per se or no hype per se when it comes to fintech valuations, at least according to this, what we see here. Now we're going to just take a look at this and see as a sample of fintech startups. On the top left corner in lending, there's like 300 peer-to-peer lending startups in the United States alone. Lots of variations. There's receivables-based companies. There's small business loans-based companies. If you migrate towards personal finance, there's a company there, Credit Karma, you might have seen on TV through commercials. They do credit scores, and they claim a community of 50 million users. Then there's also in payments, you see PayPal. I mentioned the value of PayPal. Now, there's actually been like hundreds of companies started up in the payment space. Kickstarter and Indiegogo, I'm sorry, there's so many logos here, but if you look down at crowdfunding, you see there Kickstarter and Indiegogo. They're two of the more famous examples of tapping into the crowd for product funding. Lots of really good stories in the media that you've all heard of, but there's unfortunately a lot of scams. There's a high percentage of problems in that world. What you don't see in here, I just want to point out, is insurance startups. It's interesting. Insurance is you know, I think since a lot of people are in the financial industry here, they understand insurance really well, but I don't think the broader public understands insurance to the extent of what really exists. People think of insurance as backup, but the amount of products that exist in the insurance world, if you've been following the Panama Papers, then the insurance industry has a lot of legal arbitrage that is similar to things that happen in international type of holding. So the insurance industry we haven't yet seen the surge in startups, but it's coming and it's going to be very significant. So just wanted to point that out. Okay, so in terms of, oh, Siri just came on. Excuse me. In terms of fintech investments, so this is another reason why we should pay attention to the whole fintech phenomena, because it was bumping along about 2%. There's different statistics, and I'll cross between two different sources right now. But fintech investments were bumping along around 2% of the venture market. Then all of a sudden, we see this huge surge from 2013, 2014, 2015. In fact, even if you look at a lesser statistic, the KPMG number of 14 billion, that represents about 20% of the US venture market. So we went from 2% to 20% in 3 years. That's very significant. So all of a sudden now fintech, which went from nobody even knew about it to being overhyped already, like in 1 year, has all of a sudden become a dominant place in the venture scene. So expect a ton of startups in the United States, 100%. So we're going to talk a little bit about perceptions and what people think about the fintech world. And we'll start with this survey. And what it basically shows is that 27% of people overall and 40% of millennials would consider a branchless bank. And 71% see their banking relationship as transactional. Now, what we did was we actually went and did our own survey for tonight, and we're just releasing the results. This is just the partial results tonight. On our website, we'll release the fulsome results of the survey. We'll just cherry pick some of the cool things that we got. We had 403 respondents to the survey, and what we found through our little survey was that millennials, that 18 to 34 age group, 62% currently use a fintech product, 62%. 79% say they plan to be a customer within 12 months. This is significant, I think. For those who choose, and so we asked the people, so for those that you do use fintech services, why do you use it? And so the reason cited is because it's available, it's online. The other reason cited was it was easy to set up and lower fees. Now, those who do use fintech, this is very interesting. So we asked those folks that do use fintech, do you trust your fintech provider more than your bank? Now, maybe it's a little bit of a loaded question, right? But 53%, I would have not expected that type of result. You know, over 50 some odd people said that they trust their fintech provider more than their bank. You know, one thing that I found in ancillary research about brands is that the millennials trust Yahoo, Google, eBay more than they trust Scotia, CIBC, and RBC. It's the surveys bear it out again and again and again. So it's something to be take note of. Now, for people who didn't use fintech, why were you not using fintech? So 37% said they are not aware, and 10% said they don't trust it. So some interesting results, and like I said, we'll release that more on a more fulsome basis. When you look at JP Morgan now has over 30,000 programmers and developers working at JP Morgan. Goldman Sachs, they say 1 out of every 4 employees, 25% of their employee group, are now tech employees. And Barclays, they have this whole floor-wide sort of agile setup, whereas other banks, like I think from my understanding of Scotia, is like set up multiple distributed labs. You see this quote here where JP Morgan says, we have more software developers than Google. So these big bank CEOs, especially in the United States, if you've seen Jamie Dimon and what he's been saying very loudly publicly about fintech, soon they'll be saying they are fintech companies. Won't be surprised. Now here are some recent announcements of all the various different institutions and what their plans are in fintech. So you see National Bank, May 2015, data mining. Scotiabank, actually you'll see Scotiabank because Scotia owns Tangerine. You'll see they're actually on here quite a bit. They announced the Scotia Digital Factory in October 2015, RBC same month. And then you'll see Tangerine twice, facial recognition tests and launch of their fintech incubator in February 2016. The other banks are getting involved as well, as you see. And then if we look at even more recent announcements, you'll see the Ivey Scotia announcement in March of 2016 in the middle. And what you'll see is CIBC pairing up with Mars as well as Thinking Capital, RBC with the University of Toronto. So we're seeing lots of partnerships happen in lots of different places. And this is very healthy for the ecosystem. This is exactly the right thing to do. When we look at the Greater Toronto Area, this is just one slide worth pausing for. I don't know how many people here, we'll just do it, so everyone can find it. How many people here are familiar with something called the Fields Institute? Has anyone here heard of the Fields Institute? Oh, that's awesome. That's way higher than I expected. Fields Institute is the Nobel of mathematics, and they reside right here on University of Toronto's campus, and they've been around forever. You look them up on Wikipedia, they are a legendary mathematics institution, legendary. And nobody knows that they exist right there. They don't do a job of advertising. U of T doesn't do a good job of advertising. They're number 3 in North America in R&D spending after Stanford and MIT. They spend $1.6 billion in R&D. U of T, we all hear tons and tons about Waterloo, but nobody ever hears about the great things happening at U of T, including Fields. But if you look at not only Fields, you look at Perimeter Institute. So Perimeter Institute is doing through theoretical mathematics what CERN is doing with tens of billions of dollars of advanced electronics, right? And so there's a quantum institute at Waterloo, the only bachelor or the only faculty of one of the very few faculty of mathematics. In the Greater Toronto Area, we have so much math talent right? Actually, I'll just keep going. The new professor who's at U of T, head of math, Professor Kumar, he's actually, he's like a one step below Stephen Hawking's in the world of mathematics, especially in cryptology. He's a serious player. This is all in our backyard. And it is going to set up the most amazing fintech ecosystem. The one thing I got to just say about the Communitex, the Velocities, and the Marses, and all that stuff is that what will ultimately allow the ecosystem to continue is the successful exits of companies to Apple, to Google, to Electronic Arts. It's not sustainable just to have an inflow of funding from an external source like government. Okay, so tonight we're going to talk about crowdfunding, blockchain, robo-advisors, and we're going to do a really interesting discussion in artificial intelligence. And so as we start with crowdfunding, I just want to say is that there's something really amazing about the power of crowd intelligence. You know, the power of crowd intelligence, I'll give you an example that we probably take for granted. So all the Android, which powers 80% of the phones in the world, Android is based on a Linux kernel. Linux is a crowd-built, open-sourced operating system part, and it's like really, it's really the basis of a lot of the Internet of Things. It's amazing we go through technology and technology, how much comes from the crowd. And if we go back to our roots of lending, back in the olden days, when you wanted to, say, borrow some money for a piece of equipment, you would go to your local village leader and ask them for some money. And this is sort of what we're going to in terms of our roots of some of the marketplace and P2P lending companies, as you see on the top left. And you'll see that there's also some kind of local companies, Borrowwell and Thinking Capital. But what I just wanted to point out is real estate crowdfunding. So we're seeing crowdfunding now affect real estate purchases, which is really interesting. Equity-based crowdfunding is just starting to take off, or at least starting to happen here in Canada. Talk about that a little bit. And Kickstarter we already discussed, but GoFundMe is something I think a lot of people here will be familiar with. It's gotten done very, very well, especially in Canada. So CrowdMatrix is a local company that does equity crowdfunding. It's a company that we funded, and they just got regulatory approval. But it's an interesting example. They take the AngelList model, which is a syndicate approach, which says this: if the company's going to raise $1 million, and I put in $200,000, then the other $800,000 that follows behind, we can take about between a 10 and a 30% of the economics. So you almost create like a virtual venture fund within the crowdfunding platform. It's an interesting, very interesting approach. What we've seen in Canada, though, is that when we look at our actual statistics, we are at a huge discount relative to what's happening in the United States. It's actually a 95% discount relative to the lending activity that's happening in the United States. And if you look at what's happening, what I mentioned in terms of charity-based lending, so 56% of the peer-to-peer lending in Canada is charity. So the discrepancy is actually much more than what the last chart shows. And in this article that I wrote recently in the Globe about this issue, I just want to point out one thing, is that in there I mentioned that McKinsey cited in 2014 that the global banking industry, the global financial services industry, eclipsed $1 trillion in profit for the first time worldwide. And I just want to point out one elephant in the room. If you look at the building across the street, it's got Deloitte on top. If you look at the building over there, it's got KPMG, Scotia, CIBC. The broader Canadian and retail community is aware that when you look up at all the skyscrapers, you see financial institutions, you see banks, and you see insurance companies. And the broader financial, they don't know that the industry hit $1 trillion in 2014, but they know that this industry makes ridiculously amazing profits. Good for you guys. Congratulations. I was in this world. It's awesome. But the broader public knows this. And what that means is you will not get any sympathy from these consumers. Okay? Let's just be real about that for sure. Blockchain technology. Now, I think blockchain may go down as one of the greatest inventions of the decade. And it's worthwhile. I think we're going to have a little video here to kind of help explain. Whoops. If you guys could hit the video, please.
From Silicon Valley to Wall Street, technologists and investors alike are buzzing about the potential for the blockchain to revolutionize, well, almost everything. The blockchain is a distributed ledger of transactions which are broadcast across a wide network. So let's say person A wants to send something of value to person B. That transaction is configured into a block. Then that block is broadcast across the entire network, which validates it. Person B receives what person A sent them. And finally, the block is added to the chain, which records the entire irreversible history of transactions in a distributed ledger. So up until today, blockchain has been most associated with the digital currency known as Bitcoin, but in fact, we think blockchain is a very promising technology with a wide range of potential applications beyond just digital currency that can be applied to a variety of industries. And in each of these, there's potential for disruption of middlemen, as well as reduction in the billions of dollars in administrative costs that exist today. One potential application is in the area of financial services. Today, the settlement and clearing of U.S. equities takes 3 days to complete. And during those 3 days, financial institutions tie up a lot of balance sheet and take on counterparty risk in the process. So if blockchain can be applied to reduce that transaction time from 3 days to just minutes, it could reduce the amount of systematic risk and reduce the amount of cost in the process. Another potential application of blockchain is in the area of property and real estate. In many parts of the world, property records are subject to both tampering and counterfeiting. So blockchain could be applied to reduce the number of property disputes as well as significantly reduce transaction time and cost.
Thank you, Mr. Goldman Sachs. He did a good job, though, of explaining blockchain. I'll go a little bit further. So blockchain technically is a distributed ledger, but the way I want you to think about it, it's like as if the internet had its own database. It's a database that is totally distributed, just like the internet, except it's got some very unique properties to it. But he did say some things of interest. If you noted, he said we all know equities take 3 days to clear, clearing in minutes. And then property disputes. We know that in developed countries, you say you've sold your house and then 30 people come out and say they own a part of it too. And he said it's overall reduction in costs and risks. And now one thing I just want to say in terms of if you have any concept of trying to hack Bitcoin, is very difficult, right? The Bitcoin blockchain is in order to hack it, like I was actually looking it up and I saw this quote online, I'll just read it for you. Because the Bitcoin blockchain is hard to hack because in order to hack it, you would need more than 51% of all the hashing power of the entire Bitcoin network. To give an idea of how much power that is, consider this. If you were to network together the top 500 most powerful supercomputers ever created on Earth, you would still have thousands of times less hashing power than the Bitcoin network. And the reason why is Bitcoin's gone from just being CPU-based, and then they went to becoming GPUs or graphics units just to power these mathematical transactions. And a couple years ago, some industrial people started making chips just for blockchain. And they're called ASICs. They're amazing. So the distributed ledger, what does that mean? So blockchain is distributed everywhere. So just like the internet, you take a computer off the network, doesn't matter. It doesn't affect the viability of the blockchain. And every person within the network, importantly, I skipped over too quickly, the last slide, but importantly, every person has a copy of the entire network. Now, it's protected against manipulation for the reasons that I said. It's very difficult to take over the network. And lastly, it's public and transparent. It's actually, you don't know who the person is. It's not anonymous, it's pseudonymous, if that's the right, I don't know if I got the right word, but it's something like that. It's like you're not quite anonymous. You're anonymous through a code or something like that. So these are the individual qualities of the blockchain. And if you look at what's being done out there in the commercial world, what you'll see some really interesting things. So NASDAQ is now doing share transfers of private companies. If you've ever invested in a private company, it's notorious to lose your share certificate. That's being done through blockchain. Visa and RBC are doing remittances through blockchain. Some really interesting things happening at Citibank. Citicoin is doing their own version of an international cryptocurrency called Citicoin. So you're starting to see financial institutions explore all different ways of doing blockchain. This one consortium called R3 is the consortium to watch. If you try and find some information on the web, you'll find limited information because they haven't done much yet other than get a lot of institutions on board. But what they will do is they will set up blockchain-related technologies that can be implemented industry-wide. And if you look at most banks and most financial institutions, it's estimated about 18, people might dispute this, but about 18 to 20% of the operating costs of a financial institution go to things like verifying, did this transaction occur? Is this person who they say they are? It's these little nuances that are just, incumbent in being a bank. 18 to 20%. Now that number can shrink to 1, 2, 3, I don't know what percent it'll shrink to, but using blockchain. It's a phenomenal technology. It's going to be very interesting, not only to see how it's used in the financial industry, but look at all these different industries. So in agriculture, everybody says they got organic. It's organic apples, yeah. Yeah, but how do you know? So now you'll know because blockchain will tell you, no, it's not organic. But then if you look at these other real estate, we said that was patient records, excellent example of how to use the blockchain. A database that you can't hack, that you can't change, and will stay secure forever, and that every time anyone adds to the network, it gets more secure. It's a very cool technology. And if any of you ever think in terms of startup land that you can't do your startup because Google or some big bank is in your way, just remember blockchain was invented by one person. One guy invented blockchain. You can do a lot with one person. Robo-advisors. Okay, so robo-advisors are these online wealth management services that we're seeing. Wealthsimple took out a ad in the Super Bowl even. So BMO's made an interesting announcement as well. Automated advice. And what we see here is these are some of the benefits of the robo-advisors. This is like getting a lot of attention, but we'll just quickly break it down because it's, we do see lower fees. We see quick onboarding. Customers get on very, very quickly. They love being 100% online and mobile. There was a TSX Fintech Day today, and I think it was Wealthsimple was indicating that their customers, 1 out of every 3 customers are logging on every day. In terms of daily active usage, that's very impressive. There's basically this next slide here goes back to sort of January of early 2007, and what it shows is the flow of funds from the bottom shows the flow of funds from actively managed domestic equity mutual funds. And I have some good friends in here that are fund managers. I see you guys, don't worry. I'm sorry, but this is just what's happening. Like it's almost, look at those are hundreds of billions just, like that's a big number. So that's how much has flown out. And then look at the index domestic equity ETFs. And so we're basically seeing a monster shift in the trillions from active towards passive management. And so this is what some of these first guys like Wealthsimple will try and help exploit. And this was also mentioned earlier today, but in terms of who the clienteles are, we did our survey, but look at what Charles Schwab said, that 15% have at least 1 million. And if you look at Betterment, of the 3.3 billion assets under management, more than half of them have over $100,000. And then Wealthfront, you got the same trend playing out again and again. So it's more than just the millennials. Okay, so we've already experienced a lot tonight in terms of information. We've talked about fintech quite a bit, but now we're going to talk about artificial intelligence, and this is where I think things will get a little bit crazy and interesting. If you're familiar with this gentleman, this is Ray Kurzweil, and he says, artificial intelligence will reach human levels by around 2029. Follow that out further to say 2045, and we'll have multiplied the intelligence, the human biological machine intelligence of our civilization, a billionfold. Now, Kurzweil deserves recognition because he's been on the forefront of a lot of this AI talk and a lot about this thing called the singularity, right? Why don't we do this video just to give everyone a little bit perspective on what we're talking about with AI.
Let's talk about artificial intelligence. In a recent op-ed column, you said, and I quote, "Success in creating artificial intelligence would be the biggest event in human history. Unfortunately, it might also be the last." Are you saying that robots are going to destroy humanity? And is that a scientific argument or the pitch for an amazing movie?
There's a story that scientists built an intelligent computer. The first question they asked it was, "Is there a God?" The computer replied, "There is now, and a bolt of lightning struck the plug, so it couldn't be turned off."
Holy shit, that's the most terrifying story I've ever heard.
Yes.
In the beginning, there was man, and for a time, it was good. But humanity's so-called civil societies soon fell victim to vanity and corruption. Then man made the machine in his own likeness.
A digital frontier to reshape the human condition.
Replicants are like any other machine. They're either a benefit or a hazard.
Thus did man become the architect of his own demise.
Try to create a suit of armor around the world. Artificial intelligence.
You're all going to die down here.
Human beings are a disease, a cancer of this planet. You are a plague. And we are the cure.
To protect humanity, some humans must be sacrificed. To ensure your future, some freedoms must be surrendered.
What's the problem? I think you know what the problem is just as well as I do.
It can't be bargained with, it can't be reasoned with, and it absolutely will not stop.
I was designed to save the world. There's only one path to peace. Their extinction.
Greetings, Professor Falcon.
Hello, Joshua.
How about a nice game of chess?
So how many people recognize that last movie there? Yeah, there's enough nerds in here for sure. So if you notice how the West portrays artificial intelligence, it's very gloomy and doomy. It's like artificial intelligence is invented to solve man's problems. And what's the best way to solve all man's problems is to get rid of man and woman. But, you know, if you look at it from the East perspective, they look at artificial intelligence very differently. They have robots that are lifelike, right, in Japan, and they are embracing robotics in a completely different way. They have, you know, entire religions, the Shinto religion in Japan, that's based on these fundamental concepts of treating robots like you would a person, the robots having rights. Very different viewpoints, East versus West. You know, what we're going to talk about now is the three different types of artificial intelligence. Because we have what is artificial intelligence overall. But what we have right now is we have three general categories of artificial intelligence. The first, artificial narrow intelligence, is actually in the here and right now. So on the left-hand side, you'll see that's a bot, a Facebook bot, that's, you know, giving you health advice you don't realize, but you're talking to an artificial intelligence agent. In the middle, that's Alexa. Alexa, the Amazon AI that sits in your living room. Isn't it interesting? So Apple's AI is called Siri. She's got a female voice. Alexa's a female. And I think even Google's voice is default to female. And Microsoft, their voice, Cortana, a female as well. That's an interesting coincidence. But the reason why I kind of think it's of relevance is that voice search represents a whole new way to search the internet. The one thing I promise you is that we're going to look back at Google searches and say, how did we go so many years going never past the second page with this insanely boring, you know, text-based page? Like, it's amazing that we've let it go on this long, but you're seeing the future of search right there in the middle with these AI agents that will go out and get you the information. The folks that actually made Siri, they just got a new startup, and they had a reporter come into their office a couple weeks ago to test it out. As first time it was being tested live. And what they did to test it out is they ordered an entire pizza and did all the toppings and did all the payment without talking to a human being. It's interesting how where this is going. These guys have really nailed it in terms of some really interesting technology. Self-driving cars. In Singapore this year, the end of this year, they expect to release 24-person self-driving vehicles, smart cars. That'll be really interesting what's happening there. So if you ask an artificial narrow intelligence agent, say if you ask an ANI chess player, they can beat almost anyone in the world when it comes to these narrow things like chess. But then you go and ask that same AI that does chess and say, hey, can you pass me the apple? And it'll just look at you and say, what did you just say? So they're faster in this case, not sometimes better, but not always. Artificial general intelligence. Now, this is it. This is what's hard. This is what Kurzweil calls the singularity, right? And here's why. Let's think about this. The human brain is the most complex object in the known universe. The only object more complex than the human brain is the universe itself. And so this is what we're trying to replicate through technology. And when you look at this robot and you see Chappie, just remember, the robot's a container. It doesn't matter. The mechanical part doesn't matter. It's in our brain because of the movies and stuff, but it really is not that. It is more so the series and the whatnot that I was talking earlier. But this is a huge step forward. It's not an easy accomplishment. And it's like, I'll give you an example about artificial intelligence in the general sense that we take for granted. We have a conscious mind and we have a subconscious mind. Let's think about the subconscious mind. What is the subconscious mind? The subconscious mind is a result of automated processes that become so easy, right, that it becomes subconscious. So for example, when I think about scratching my ear, I don't have to think about flexing my hand muscles, lifting my arm, directing it in the right angle. All this happens without thinking and thought. So some of the stuff, what we will do in AI is all the stuff we take for granted as human beings is going to be the stuff that's hardest. The stuff like quantum physics and doing stuff like that, that stuff AI is going to rocket on. Just remember conscious versus subconscious. It's like you're asking a computer to calculate a quantum physics problem, you get one answer, then you say to them, tell me the difference between the green in that leaf and the green in that blade of grass. Now this next one, I wish I could spend an entire night just on this one area, because this is where I spend my most time in doing this research, but it's beyond the scope of our discussion, and it's artificial superintelligence. And what this is when we hit the point of the artificial intelligence being the same level as a human being, and then all of a sudden, due to something called recursive self-improvement, the artificial intelligence, superintelligence will go like this and just take off, and this is why we see some of the scary things that are being said out there. And recursive self-improvement is this. If you think about in 2015, how much did you evolve as an individual? What did you learn percentage-wise? Did you evolve 3%? Well, think about an internet-connected artificial intelligence agent. It's evolving by the second. It's evolving at such a fast geometric rate. That's why it's beyond the scope of this discussion. And if this is of any interest to you, then there's this guy, Isaac Asimov. Isaac Asimov, he's the one who wrote I, Robot and some of the movies. Check out this book. It's online. It's a short story, and it's called The Last Question. The Last Question. Because artificial intelligence, when you extrapolate the results of artificial intelligence, it will start to question some of the fundamental cores of how we define being human. What is our belief system? So that book is the only one that it does a really good job of trying to explain it. Now, when we look at human improvement and human evolution, we kind of look at it like this. Okay, so here's where we are present day. Here's the trajectory based on growth. Here's an extrapolation. Boom. When we have exponential growth, it's actually beyond our human mind to be able to fully appreciate and understand exponential growth. This is why every person, when they get old, says it was so expensive when they were young. Why does everybody say that? It's because our brains are not structured to understand geometric growth. It's structured for linear growth. So we don't understand that we're right in the middle of the most amazing human point in innovation, where we have all this innovation happening so rapidly and compounding on each other. And because software is different, software is an industry where you truly stand on the shoulder of giants. Because when somebody designs a piece of software that, boom, does a lighting model for this room, why would anyone else ever have to do that again? So the code is just building on itself and building on its 50 billion network connections. Maybe the internet itself will become sentient. It'll be interesting. Now, there's 3 different types of achieving artificial general intelligence. I'll just get into it very quickly because it's cool. Like in terms of neural networks, this is inspired by biological models. And what happens is this, is that every electrical connection, every sort of event will have a numerical weight or an electrical weight to it. And just like in our brain, as the electronic brain does more and more processes, it will develop sort of routes that will be optimized, just similar to how our brain uses. But here's the difference on how to think of it. It's machine learning versus rules-based programming. So the way we develop software is we develop based on rules. But the way the machines will write their own software will be based on how they learn. So they can do things like test every scenario simultaneously, right? That's the difference. Whole brain emulation is the one that I actually understand the least. It's the one that is difficult to understand. It's actually literally the uploading of your consciousness into a computer. So have anyone here seen the movie Transcendence with Johnny Depp? So if you've seen that movie, that's what that movie's about. And if you look it up on the internet, they don't call it whole brain emulation, they call it mind uploading. And it's all part of this transhumanist movement that's it's a black hole, so if you haven't heard of it, check it out. Now, the last one, genetic algorithms, this is the one that I think is the most interesting from my point of view. It's kind of based on natural selection. You get random mutations of code. You have one piece of code merging with another piece of code, and what's the better code? So this is what Google implemented several years ago with their image search. So what you guys see in Google Images today is an algorithm that no Google developer understands. You can check it out right now because the person who's in charge of it, he says we've long past lost control or understanding of the algorithm. This is what's going on in Google Images today. It's an iterative process happening at light speed. Now, how do you test for artificial general intelligence? The most traditional test is something called the Turing test. And the Turing test is very simple. It's just that if you can't tell that it's an artificial intelligence talking to you, then it's an artificial intelligence, okay? And, but there's a much more interesting test called the Chinese room test. I want to explain this one. So on the left, we'll just call it simple Chinese from now, even though it's obviously Mandarin. But on the left-hand side, we have a person who just speaks Chinese. And he writes Chinese, or she writes Chinese, and puts it on a tablet and puts it into the room. Now, the person in the middle, they don't speak, they take that tablet, they take that input, they go over to the translator, they translate the Chinese to another symbol, let's call it English. Then they go into the corner and they pick from the available stones and symbols, they figure out, okay, what does that mean? After looking at the book, and they put it on the output. Now, what I want you to do is replace that person in the middle with an artificial intelligence. And then ask yourself this question. Does the AI know how to speak Chinese? It's a really interesting question because it goes to the root of some of the most fascinating parts of AI research, which is what is consciousness, right? What is the definition of consciousness? So to me, when I look at AI and what it means to humanity, I have a different view than Ray Kurzweil, although he has a cool first name. I'd say that, my view of what is the singularity in AI is that AI will do more to teach humanity about what it means to be human than any other thing in human history. Elon Musk says, with artificial intelligence, we are summoning the demon. In all those stories, there's the guy with the pentagram and the holy water. It's like, yeah, he's sure he can control the demon. Doesn't work out. So it's not just Elon Musk, though. It's Bill Gates, it's Stephen Hawking. Everyone's saying, be wary of letting the genie out of the bottle. Elon Musk recently started this open AI movement that is of potential interest. And I want to just, we're almost done now, and I want to just show this video here, because I think what it does is it kind of represents more of what I see as AI of the future, where you get an AI agent is born. Think of an AI agent being born at the same time that you're born. So why don't we show the video, and we'll see how it looks, what that looks like.
I'm Cortana.
Just as we wrap up, I'll just wrap up with a couple of concluding points, but there's a few members of our team that are in the room. I didn't talk about Extreme at all, but we've got Josh, who runs Extreme Innovations, Lucy, who runs Extreme Accelerator. Got a few folks, Amir, my associate, that are in the room. Woodsy from Crowd Matrix. If any of these people, you see them around, feel free to bug them. And I just wanted to just wrap up with a few thoughts about what are sort of some of the key, well, let's say what are the 3 key takeaway points of tonight. You know, we managed to discuss the history of innovation all the way back from controlled fire in 400,000 BCE, and in one evening we went all the way up to artificial intelligence. But one of the objectives of today was to provide a little bit more perspective on human innovation, and hopefully we're able to do that. Secondly, I want to say fintech is definitely overhyped. It's no question it's overhyped, but the sheer level of investment combined with the addressable market opportunity means that, you know, in the trillions, it means the hype is sort of worthy of our consideration. So, you know, don't believe the hype maybe, but there's something to this that's worth watching. And the last thing is that AI is a big deal. It is a very big deal. It'll manifest very aggressively within fintech, because think about fintech and AI. They fit so nicely together. The nature of finance and AI being numeric, it is actually going to be an area where AI will flourish. And it's on the horizon, and it's, you know, it's not just self-driving cars and stuff like that. And to me, the ultimate innovation of artificial intelligence will be, it's sort of going to be an event that'll be almost of the same scale as if an alien descended and landed in front of us type of thing. It's a big deal. So I think that's one thing that I wanted to mention. And I think this is why Hollywood is making so many movies about AI lately, if you've noticed. It's my hope that you'll found some value in our discussion tonight. Thank you very much for your attention and consideration. How are we doing time-wise?
So we're now going to move to a question and answer period. Do you want to take a seat? So, you know, very wide-ranging, thought-provoking, fascinating. I think we've chosen you know, Ray is a great inaugural speaker for the speaker series. What we had up before, which I failed to point out, is we have 3 of my colleagues with mics who are willing to take your questions from the audience. If you prefer, you can send them to me by text. I've been collecting text questions over the course of the evening to this telephone number. I unfortunately don't have the artificial intelligence to read it without glasses, so I will. I was going to ask Siri to ask the first question, but she was busy. So let me just ask a few questions that have already come in. Ray, one of the questions was the impact of innovation on the Scotia customer service centers and service. You made the reference to Anthony Jenkins from Barclays and the closure of branches. And then there was a follow-up question also on the impact of artificial intelligence on customer interactions.
Okay. On the first part, what Scotia faces is what any company faces whenever you have a disruption event happening in your industry. So the Clayton Christensen from Harvard, who came up with the whole book of Innovator's Dilemma, he cited the examples of disk drives. But whether it be the disk drive industry or whether it be even what Apple's facing now that the iPhone growth has turned the corner, you know, anytime you have a mature market being faced with relentless competition, you know, what do? Well, what we've seen in telecom and other big traditional industries is you see a very heavy acquisition and investment model. You know, you go out and you pick off the companies that are threatening you the most, and that's definitely going to happen. The one thing that's different about this industry, about your industry, that's a real X factor is regulatory. So, you know, your background in this is especially appropriate. Regulatory, which was the bane of the financial services existence, will actually be the moat that helps prevent a lot of these fintech companies from getting off the ground. So you know, it's interesting how Scotia is going to face this thing that if you look at, again, the business school type of theology on this stuff, it's that you know, you help the innovation thrive outside of your culture so that it can happen and occur without internal disruption. One last thing is that luck and serendipity has a lot to do with a lot of the startups that we get involved in. It just is the case. Like, you know, there's very few startups that end up the way the entrepreneur originally pitches you. So I can give you some real life examples if you want. In 2006, Mark Zuckerberg was sitting with a beer in his hand and he was asked, Zuck, what's your vision of Facebook? And his answer was, Facebook will become the yellow pages and the white pages for every college and university in the world. Or if you look at Steve Jobs, the man himself, when you look at the book, you know, I wrote that before the book came out, but when I read the book, I saw that you know, the board had to convince Jobs to do the App Store, that the App Store came out a year after the iPhone, that he was fighting them. It's this whole web-based apps versus App Store-based apps. So Steve Jobs had no idea how big the App Store would become because he didn't want it. Luck and serendipity has a lot to do, accidental innovation has a lot to do with startup life. It's just something that's very difficult to create.
Thank you. So another question is about the role of central banks in a world with blockchain. Are they obsolete?
Actually, the central banks can play and I think you should answer that question.
Leave it to you.
Yeah. Well, because we have a Bank of Canada expert. So central banks will actually can play if you saw what that R3 represents, it's sort of like the professionalization of blockchain. And you know, I think the central banks can definitely play a role in helping bring some sanity to it. There's this weird like cult effort in the. It's like when Android started being less open source, or whenever there is a group that is really, you know, hyper concerned about keeping the sanctity of blockchain the way it is. So we'll see how those forces fight with the central banks.
Okay, there's a lot of questions coming in about AI, but this is an interesting one. Is personal privacy now gone?
Pretty much, yeah. Personal privacy is pretty much toast.
This one might be tougher for you to ask. Who's going to win, the Raptors or the Cavs?
Actually, and I think there's a Justin Bieber concert tonight. I don't know why these people aren't at Justin Bieber.
That explains a couple of the empty seats up front. So in the case of AI for financial services, there's robo-advisors, but what else do you see coming?
Oh, well, the advisors is just actually think about the ETFs and like you take a profile, a demographic of a person, and you map out that's actually a very simple, it's not a very difficult thing, your analysis to do. That's the first generation. That is not what you're going to see AI become. I think you're going to see much more sophisticated than that. But just to be clear, like on one thing is that you take a formula, right? And then it's just like how fintech. So fintech, the word fintech, if you have a website that has financial services, you're a fintech company, right? So if you take a formula, all of a sudden you have an algorithm, right? And if you have an algorithm, now you have an AI. We got to be careful about how people represent themselves when it comes to AI and financial services. You know, in terms of where AI can be really, really helpful, there's so many things that we take for granted. There's an AI for contract law. So when there's an M&A contract that I saw with Nortel, big Nortel 400-page document, and all this AI did was look at the semantics of the language used in the contract law and flagged all these ambiguities, like 50, 60 ambiguities, 50 or 60 ways in which you can improve the English, tighten the English, so that the English is more effective within the contract law. So the AI in terms of robo-advisors, I think that's why I didn't spend a ton of time on that, because it's just scratching the surface.
So less work for lawyers checking contracts.
Well, actually, good in AI. And if you're making less than $40,000 a year, or if you're making over $300,000 a year, you're in the target sites. Okay, one last thing. This is really cool. The one profession that's going to get really hit hard by AI is the medical profession. The medical profession is in big trouble. You guys think, oh, doctors, they kind of they have a feeling of why you're sick. Think about AI doctors versus a regular doctor. If human and physician error, medical error, are the #1 cause of death in U.S. hospitals. The number one, not the #2, not the #4. There's a whole science named after it. It's so big. Physician and medical error. So think about it if you're a doctor. You have to remember every single medical condition, all the different scenarios, and all the patient's personal history. How is that possible? Of course, AIs are coming right after the doctors, big time. And you watch out. And I think it's appropriate because this whole thing about errors is not acceptable. Sorry.
Okay, so here's a question that's about how Canada is doing. So the question is, how do we move from sort of consumer fintech for Canadians that goes from me to me first innovation? And it continues, when will Canada get its first globally focused unicorn versus just a Canadian focused fintech?
Okay, so this is a philosophical issue, I think, as this is beyond, definitely beyond fintech. So I hear this all the time that people are complaining there's not these billion-dollar startups. And I worked in the investment banking world, so I was working with the big caps. But what is the reality that we see? We see Google acquiring 6 companies in the city of Toronto alone. 6. Canada is the ultimate R&D talent acquisition. It is the ultimate place. What's wrong with investing $1 to $2 million in your startup and then exiting for $30 to $40 or $50 million to an Apple or someone like that? You do that all day long. And what do you think those people who make money from the entrepreneurs, what do they do with that money? They go and they invest in the next generation of startups. It's cradle to grave. I think it's, of course, it'd be nice to have, how can you argue with this? Like, we were going to do a debate at City How, and they were going to have a big cap tech executive go against me, and the debate was going to be, we need to have more big companies. Well, I'm not going to argue against that. Of course, it'd be nice to have big cap, but the reality is, we have Shred. We have a workforce that is much more loyal. We have a Canadian dollar that's at a discount, and we have a GTA workforce, it's not even a quality question at all, is it? GTA has 3 of the top 10 digital art schools in the world. OCAD, Sheridan, these are world-class institutions. And so it is a natural environment just to have acquisitions happen constantly. So I don't know. Of course, I'd like to have bigger cap companies, but I think it's okay.
So I'm afraid we're kind of getting to the end here, and we've got many more messages than we're going to be able to take. But one question is, for fintech in Canada, who's in control? Is it the government? Is it corporations? Is it individuals? Who's going to push it forward?
Well, it is definitely my hope that it's that we're going to see a big increase in the number of startups in Canada. The truth is, there's not been enough startups in Canada relative to the U.S. It's not just a funding issue. So the way I portrayed it was, there's not enough funding, and it's a funding problem. It's actually both. It's a balance issue. The number of startups in Canada are still, on the relatively small side compared to the United States. But that's changing big time. You guys saw the amount of announcements that Scotia and Tangerine have made alone. So we know we're gonna see a significant change over the next year or 2.
Okay. Well, I'm gonna ask one last question, then we're gonna have to break. But what are your thoughts on cybersecurity?
So I was just actually down at Apple headquarters in Cupertino, and I was having a discussion just on security, because Apple actually is very, very, very conscious of your security. Only when they started fighting the FBI did the world wake up and realize how security conscious Apple was. But of all the companies, Apple is by far, I think, the most security conscious, the one that's taking least advantage of the data that they could. But having said that, we're in a world where security is not realistic, given that it's a never-ending scenario of chicken and egg. And what I was saying that earlier when I was being flippant about us just being out there, the new generation, the way they are on social media, they're experiencing their lives out there. They're getting comfortable with having a lot of free information out there. There is one thing that solves the security problem, and it's called quantum cryptography. Now, quantum cryptography, there is a woman in Waterloo who's from Stanford who did her thesis in quantum cryptography. That does solve the problem. I don't know how far that is, but there is a potential solution on the horizon that will solve the whole problem about security.
Well, the one thing we haven't figured out is how to create more time. So we've come to an end. So let me start by thanking you I know Ray has actually been working on this presentation for over a month. He's been very thoughtful. He really took this inaugural speech very seriously, and I hope you've really seen He's given you a real picture into a world that we're going to be reading about, learning about every day. We wanted to get you a gift to thank you for speaking today, but we didn't want to get you something that a computer could do yet, so we got you some flowers.
Thanks, Michael. Thanks so much. Appreciate it.
Okay.
Thank you.
So let me thank again Scotiabank for hosting us in this wonderful facility. They built this facility to be a center for thought leadership here in Toronto. We're going to be using it along with others to sort of host these kind of events, not only speaker series, but also educational symposiums and hackathons. Thank you to Randy and to Kyle and our hosts. Also, thanks to my colleagues from Ivey who've been here helping. There's many people to thank. We hope to see you again. If you're interested in learning more about the kind of events that we're going to be running, please send an email to digitalbankinglab@ivey.ca, and either myself or my colleague, JP Varon, will be following up. Thank you very much for your time.
Good start.